Well, hello again, traders, and welcome back to Maverick Currencies preview on the US CPI report that's due within the less than 48 hours on Thursday morning at 8:30 a.m. Eastern Standard Time. So, as always, our job is to make sure we are aligning our thoughts with what the market is telling us. And there's a lot of noise out there right now with this U.S. midterm elections. We had a big meltdown in the crypto markets. But let's take a bit of a focus on the U.S. dollar and this upcoming US CPI report, which is, again, a big market mover event. I think market still looks pretty much on the sideline, on the quiet side here. I think the big move is likely to happen on the CPI report. So nothing really has changed. Again, the expectation is still for the inflation to run hot. And as we look at the estimates here in this report, we are actually expecting a CPI to be a little hotter for a month over month, and the year over year is actually coming down to 7.9%. So this is what the expectation is. I mean, if we take a look at a lot of these commodities, a lot of the things that are really affecting inflation, I mean, we haven't really seen any sort of big improvement. And just last week, we had the Fed Chair Powell that came out very hawkish, that they're still on path of raising rates, and unless inflation comes down, which not just a one-off report, but they need to see things come down on a consistent basis before they make adjustment to their policy. So that's where we are sitting. And I think as we jump into the markets, I think that let's do a quick currency market analysis, because I think this is where the markets kind of look interesting. So as we study the US dollar basket, again, we're just trying to figure out, okay, where is the next big move on the dollar? Because a lot of times, we start to see the price action start to go sideways, and then we expect a bigger move one or the other. I mean, in this case, you can see that the dollar actually has depreciated very nicely in the last 4 trading days. So after that big move up that we had last week, we actually have seen a nice reversal. So the question really is the move in the dollar done? Is this or is it going to be by the dip opportunity? So as we kind of study the previous, the CPI releases and then see how the price action was, one of the things we noticed is that we actually had a pretty hot inflation number in the past, few months. Exception is in August. In August, we got a surprise here. So everything was looking strong in the CPI. We got a bit of a dip here. And again, that dip can be because of that big dip we saw in the energy prices. But again, as you can see, things kind of picked up, and the inflation started to run hot again. And so is the US dollar. But we had this blip over here where before this event, we had this July the inflation numbers here, and we actually had a nice little peak off of that number, and we started to just decline. And when we got this report, the dollar was already declining, and then this report was a surprise. We got a nice big move down, but that again, after that, we started to see a quick rise up. So if you look at it overall, price action has been supporting. CPI is running hot. We get a big move. September, again, was another month where we start to see the dollar pull back ahead of the CPI. So you can see just a week prior in the 4 trading days, the dollar did depreciated over here. And then we had a big change. I mean, I think the traders were expecting the CPI to be actually weaker by, with back-to-back down numbers. But that didn't happen. Big mispricing, and then the dollar took off. So here we are. Even in the last meeting, we had the dollar kind of stay strong, but I mean, we are getting a bit of a preemptive price action early on for the dollar to move lower. The question is dollar ready to move lower? And this is where we start to piece together some of this market price action and some of the correlation. So let's just start the correlation with the bond yields. I mean, the yields, we talked about it. Again, there's a very nice correlation throughout this year, with some exceptions in between where the things were not as aligned. But overall, I think we have a pretty clear picture. As the yields are rising, the dollar was rising. So I mean, this is where we've seen a disconnect. So the disconnect is that we've seen a nice rally in the yields, we've seen a nice rally in the dollar, but this move came after the yields continue to stay strong. I mean, so the yields hasn't really fallen back lower, but we are seeing the dollar kind of taking that charge. So where is this move coming from in the dollar? Or is this just a move really telling us that maybe the everything else will start to follow onto the downside? I think this is where we have this divergence that's taking place, which is kind of interesting. Because if you go back, even going back in May or in June, July, I mean, some of the decline that came in the market, as you can see over here, the yields kind of topped out. I mean, the dollar topped out before yields did, but then they both start to follow that same direction. And the same thing over here back in May, the yields start to pull back first, and then the dollar did follow the suit. So we are seeing a bit of this lag by a week, but eventually one catches up with the other. So the question really is, where does the dollar go? Let's do another correlation with the equity markets. That's another difference with the equity markets here. I mean, you can see the equity markets, or as we talk about the risk on versus risk off sentiment. As the markets are improving, we are seeing the dollar comes down. So right now we're getting a nice little correlation with this equity markets. As the risk on sentiment is better, now we're seeing the dollar did pull back. So this is one of the report that I would say it's really showing mixed picture. So either one of the it's going to happen. Either the deal is going to catch up with this, or the dollar is just going to be a long opportunity to buy on the dip, especially if this report comes out hotter again. This is something we can see what we saw back in September, where we've seen a nice little reversal off of that, and then there you go. That was a big buying opportunity there. So I think this report is going to be market moving, both for the equity markets and for the US dollar and for the yield. So there's a lot to really pay attention to. So as we take a look at a lot of this currency crosses, I think the dollar certainly looks like it wants to go lower. And there's a lot of different setups that we can find that actually looks pretty good. For example, euro dollar, you can see we are actually back at the resistance. So there's a decent chance for it to break out. So the real question is, it's not about the euro dollar. I think the question is what the dollar is going to do. Because if we get a nice little move down to the dollar, I think the dollar pairs, doesn't matter what you're looking at, will have a big move. Here's another interesting chart that I was looking at, was the dollar yen. I mean, take a look at that resistance that broke out at 145. I mean, we almost got to 1,451 and then reverses back here. This kind of looks interesting because slowly dollar seems to be losing ground against not just the euro, not just against the Aussie, but against most of the currencies across the board. And that's, again, an odd bullish sign if you're trying to be on the long side of the dollar. So, I mean, here's we have the Aussie dollar that looks like it wants to break out. So it's just sitting at that point, consolidating a little bit here. Same thing goes with the Kiwi dollar, already rising into it. We already looked at euro dollar, which again, sitting at the resistance here. We have pound dollar. So, I mean, a lot of these dollar crosses kind of look very similar to me. But again, the one that really stands out the most, I mean, look at that reversal we saw in dollar Swiss franc. Dollar yen is slowly declining, and that's, again, these are the currency pairs we need to pay attention to, because if they do break lower, I think the dollar can actually have a much bigger move to the downside. So again, I think it all comes down to the US CPI report. So as we take a look at the velocity scores, I mean, it's pretty clear where the dollar is and what we can pair it with if we get the strong dollar or the weaker dollar. So if the dollar remains weak, I think the best pairing, again, remains the euro Oz, euro dollar, pound dollar, and even dollar Swiss franc. And then we have the one that's lagging, but they're following suit, is also Aussie and the Kiwi. On the other hand, if the dollar comes out stronger, I think we can just pretty much flip this picture. So that's really what we are looking at coming into the CPI report. And this is where we start to talk about strategies and how we're going to use, or what strategy we're going to use in order to capture the move. So there's always three methods of trading on this news: enter before, enter on the news, or second stage. I know if you have a good bias that you think the dollar actually is going to weaken further, we can always build up a position going into that news event. And this is where you can start to kind of build up a position a day before. You can slowly start to enter a position and start to leg in with a smaller position size and leading up to the event. So that's where you can build up a little bit of risk cushion if the position is moving your way, and we can actually use that as a premise. or we can enter on the news. I think at this point, unless you have a strong bias which way the dollar is going to go, I think entering on the news is not a bad idea. We have seen things reverse very drastically. I think at this point, it doesn't matter what happened with the CPI. I think we'll get a nice little multi-day move off of that. So even though if we miss the initial pips, I think there's still a good chance to get a nice little move that we can enter on the news. And then on the second stage, we can use as a legging strategy. So I do like a big movement coming off of the CPI report, and that's really where we need to decide which one is the best way. And like I said, if your bias is much weaker on the dollar, then you can always build up a position going into that event as well. So as we trade the news event, again, we're expecting a big move, which means that we could see a very quick price action, and always anticipate some slippages around these market moving news events. So the best way to really capture or to minimize that is by using stop limit orders. You have to create a little window for yourself. And if the price that really jumps out of the window, then there's no point chasing it. But a lot of times, we can see a 20, 30 pip sort of slippage depending on what pair you're trading. When you're trading on the news, again, whipsaws are always those things that we dread for, especially when the price action doesn't go anywhere. And that's why sometimes traders like to let the initial price action get out of the way before we're jumping on. So I always just get this question, what time frame should I be really paying attention to? I think between 5 minute to 15 minute, we can really look at that price action and then establish the highs and the lows and see which way it would really go. So we have the high and the low here, which way it follows through. Usually that's where we get the big move. So again, there's all different ways of trading, and the only way to be really profitable over time with trading news events is by being consistent with your decision making. So make sure your decision making is there in your trading plan and you're following that. And as we talked about the trade setup analysis, I think a lot of this dollar crosses that are setting up very nicely for a breakout. As we talked about dollar bearishness, let's talk about dollar bullishness. What would you go long against? If the dollar actually goes to the upside, I think this is where we can pretty much look at the very similar pairs and then look for a reversal. If you look at the Aussie dollar, they're slowly getting into the resistance zone over here. So at this point, if it does fail, I think we have this range that we're dealing with from 63 up to 65. Same thing goes with the Kiwi dollar. We have a wide range that we're dealing with. At this point, if this fails, it has some room for this to fall to test some support here. So I think depending on which pairs you're looking at, we'll see what the relative strength of weakness is telling us. But right now, I think there's a nice support here in the dollar Swiss franc. It's at 98.50. There's a decent level for this to kind of rise as well. So at this point, I think same crosses that we're looking for a breakout, we might get a nice reversal in the similar crosses as well. So I think an Aussie dollar, Kiwi dollar, like mover from this outcome of the CPI report. So let's wrap this up here. Use stop limit orders for any before or on the news trades. Always make sure you're trying to avoid that volatility. US dollar again pulling back ahead of the CPI report. So the question really is, should we buy the dip? Or is it something that is going to continue? So something we have to kind of wait on Thursday to find out. Aussie dollar, Kiwi dollar crosses for most negative correlation. I'm really paying a close attention to dollar yen. The 145 prior resistance is now support. So we have to really look at this. And if the dollar is really turning its tide, I think there's a lot of pairs that it can really have a nice little continuation of the movement that we have seen so far once we start to clear out those support and resistance levels. So expecting a big move, make sure you're in there trying to capture a move on the news. Well, thanks for joining and happy trading.